Alrighty, 9:01. Let's go ahead and get started. Good morning, everyone. Please use the chat for networking with one another. Put in your name, your business name, any contact information you'd like to add, like your website address. And we will get started. This morning, we have a presenter, a local chapter member, Janine Wilson. She is an HR specialist. I'm sure she'll tell you a little bit about herself. SCORE, in case you didn't know, if you just magically appeared here, SCORE is a nationwide nonprofit of volunteer business mentors. We're all here to give back to our communities and to give people the resources and advice that they need on their business challenges, whether you're a startup, you're in business, or you're looking for an exit strategy. So please keep that in mind. We are across the country as well as across the entire state. Janine and I were just joking before we got started that north, south, east, and west is Logan and St. George and Moab and Wendover. Well, let's go
And
ahead and
everything in
get,
between.
yes, and everything in between. Let's go ahead and get started. Janine Wilson.
All right. Thank you. Thank you, Carol. And welcome everyone who's here. I am going to be talking about wage and hour laws and compliance. Some of you submitted some questions ahead of time, so I'm going to try and address those as we weave them through the presentation. But if we have other questions, you're more than welcome to either pop them in the chat for Carol. She can bring them forward, or we can move them to the end and we can talk about them at the end. So I'm going to cover a lot of information today. There's a lot to do with wage and hour. It is not a hour and a half presentation. It's a lot of information, but I'm going to try and hit the high points, and especially those that apply to small businesses. So that's really what I want to, and startups, that's where I really want to focus. So the first question is always, I want to hire my first employee. Where do I start? Right. So there's not just a quick fix for this. There's several steps you have to take. I'm going to try and talk about each of those very quickly. So first of all, you have to have an EIN number, an employer identification number, and you may already have this when you started your organization, but you do have to get one of those from the IRS. There's a form to fill out for that. Secondly, you have to register with your state labor department. What you're saying to your state is that I'm now going to hire people, I'm going to have employees, and you now have to start paying unemployment taxes in the event you have unemployment claims. So you have to register with your state labor department, and that you'll need to go to you can go to the Department of Labor as well, the website, and it will give you a list of those state unemployment insurance tax offices or agencies. You then have to buy workers' compensation insurance. You have to provide workers' compensation if you have one employee or if you have 200 employees. So you've got to have workers' compensation coverage for your employees. So you go to your insurance broker and they can get that for you. There are some state workers' compensation funds and those types of things you can enroll in. It's entirely up to you. Go to your market and look what is the best for your organization. You should set up a payroll system. Now, this can be an Excel spreadsheet, but you need to keep a lot of information. And so you want to figure out how you want to do that. You'll need to withhold Social Security taxes, Medicare tax payments, et cetera, et cetera. So you've got to start to figure out a way to do that. Now, there's a lot of fairly inexpensive softwares that you can use. You can outsource your payroll to a third party. It's entirely up to you. You can go to the irs.gov and see how all the things that you need to make sure you have in your payroll system. But there are certain things you have to withdraw from a payroll every single pay period. I would also encourage you, you need to define your payroll schedule, because you've got to be consistent in how you pay your employees. So you've got to identify what your work week is and when your pay dates are. When are you going to do it on a weekly schedule, on a bi-weekly schedule, semi-monthly, monthly? It's up to you. You can do whatever you like, but you do have to make sure that you identify what your schedule is and then when you pay. Some states will indicate you have to pay wages within a certain period of time after the end of the pay period. So you'll want us to check with your local state to determine what that is. It's typically no more than a week after the payroll period ends, you've got to pay. I would also encourage you, when you do that to open up a payroll account in your separate from your operating accounts so that you can keep all payroll dollars, taxes and everything else in one bucket in your bank. If you hire an employee, every employee's got to fill out a W-4. That tells you how much you withhold in taxes from them, how many allowances they're going to have. So they've got to complete a W-4 form. They've also got to complete an I-9 form, which is the Immigration Reform and Control form that tells you that they are eligible to work in the U.S. And you've got to verify all those documents that they're showing you that they're saying allows them to be eligible. That's a whole nother webinar, but make sure you do an I-9 on everybody. A W-4 and an I-9 have to be kept on site for inspection if the Department of Labor ever came in and audited you, or if immigration ever came in and audited you. So you've got to keep those paper forms somewhere, and they have to be separate. I'm sorry, I-9s have to be separate from the employee's personnel file. It cannot be in the personnel file. It's got to be separate. And you've got to watch expiration dates if they're on, say, a visa or something like that. You've got to monitor it and make sure that you follow up if it expires in 2 years. In 2 years, set your calendar note. I've got to go check with Bob and make sure that his immigration paperwork has been updated. You've got to report each employee to your state, and that's to your state agency for new hire reporting. That is required in every state in the U.S., and that is a way for the state to track down folks who owe child support. So your state new hire reporting can help you with that, but you've got to report every time you have a new employee. You've got to report that to them. You've got to post all required notices. Now, how you do that's up to you. You can purchase a set of employment or labor posters. You can download those from the Department of Labor for free, but you've got to post notices. So things around how to report a workers' compensation, how to report a labor claim, those types of things have all got to be posted and visible in every location that you own. You got to file an IRS Form 940 annually, and that's your federal unemployment tax form. You've got to file that. You've got to adopt workplace safety measures. So under OSHA, once you get your unemployment insurance and OSHA is aware you have employees, you have to adopt workplace safety measures. And that would be training employees, making sure the workplace is free of hazards, notifying government administrators if there's an accident, keeping safety records. All those have got to be in place once you have employees in your organization. Create an employee handbook or policies. That one I have an asterisk on, and the reason I do is because that's not required by any government agency. But I would encourage you to create a handbook, or even if it's a set of policies, so that you can refer to it when you have a conversation with an employee that that's not okay here. I need to have you no longer do that. So if you have a policy around it, around whatever it is, you have a way to defend yourself. And make sure that the employee understands that their employment is at will, and that unless they've signed some kind of a contract. You need to set up individual personnel files. As I mentioned, you've got to keep some paperwork with them for their finances and that type of thing, but also any changes in their pay and that kind of thing should be somewhere in a file. It can be a completely electronic file, doesn't have to be paper, but you do need to have personnel files because if you are ever audited by the Department of Labor, it's the first place they're going to go and start looking for stuff. You want to maintain meticulous records. And the reason I say that is that all of your payroll data is auditable. And if there's ever a claim, the first place they're going to go is they're going to say, show us the payroll records or show us your policy on that kind of thing. So keep records, all your payroll records and taxes and all that type of thing. And then finally set up employee benefits. This is not required. So an employer is not required to offer any benefits. You're not required to offer vacation. You're not required to offer health insurance. You don't have to. Obviously, that's what makes people want to work for you and stay with you when they have a benefit package. You've got to decide on that as you grow as an organization. I'll give you some ideas for benefits. If you can't afford a health plan, what I suggested to a individual I know that owns a couple of retail facilities. She's got like 25 employees or so total between 2 or 3 locations. I said, just give them a stipend and tell them they can use that for whatever they want. but you would like them to use it to go out onto the federal site, the marketplace, the healthcare marketplace, and help them pay for the premium for their insurance. You can do that rather than you trying to say, okay, do I want to get Blue Cross Blue Shield, or whatever it is. That becomes a headache for you. So if you don't have the bandwidth and the money to provide benefits, you can give them a stipend towards perhaps the marketplace to go out and find a healthcare plan for their family. As far as vacation and that type of thing, it's entirely up to you. If you want to do it, you can. So those are the steps, and I apologize. There's a lot of them. So when you start thinking about, gee, I think I need to have some help, make sure you follow these steps. You can talk to your attorney. You can talk to a benefits broker for benefits information. You can outsource your payroll. Like I say, you can send it out to a third party to do the payroll. If you want to do it yourself, just make sure you understand everything that you've got to monitor and to log on a ongoing basis. I'm going to talk a little bit more detail about payroll as we go, but I do want to just let you know of all these many steps. And the Department of Labor website has got a huge amount of information for how you go through these steps. Let's start with one piece of legislation that I think is the, what I call it, the overarching legislation around wage and hour. That's the Fair Labor Standards Act, or the FLSA. So the FLSA was a huge piece of legislation that was passed in 1938. It has only changed a couple of times since 1938. So that's how sweeping it was. And it applies to virtually every employer in the US. So it applies, as this says, to organizations with employees who are engaged in interstate commerce, produce goods for interstate commerce, or handle, sell, or work on goods, materials that have been moved in, produced for interstate commerce by any person. And you have $500,000 in annual dollar volume of business. Now you may say, I'm just a small two-man shop. I want to be 500,000. We're only 100,000 at this point. This doesn't apply to me. You're wrong. The problem is that it says interstate commerce. Now, in 1938, that means that you send a telegram, or I don't know, I don't want to say horse and buggy, but interstate commerce was not as common as it is today. And interstate commerce today, as interpreted by the Department of Labor under the FLSA, is if you pick up the phone and you order cardboard for your boxes from California and you're in Utah, that's interstate commerce. You've just engaged in interstate commerce. So you are probably covered by the FLSA. There's very few people that are not going to be covered by the FLSA. So even if you're not, if you have one employee who takes a phone call from a customer that lives out of state, you're engaged in interstate commerce, and that one person is covered by the FLSA. So it's easier for you to say, I'm covered by the FLSA, all these laws apply to me, because for the most part, you are probably covered by FLSA based on this interstate commerce piece. Also, if you are, there are some special areas that are covered by FLSA regardless of anything else, such as household workers, either nannies, domestic workers, maids, home care workers, any kind of domestic help, anybody working in a hospital, residential care facilities, schools, preschools, elementary schools, all those people are always covered by FLSA. So let's talk a little bit about each of the pieces. There's several pieces to the FLSA. And individual employees whose job duties involve interstate commerce. All right. So there are basically these 7 areas that are covered under the FLSA that fall under its umbrella, if you will, and we'll talk about each one of those. And so we're going to talk primarily about federal, because the FLSA is a federal law. I want you to always keep in mind, as I'm going through these pieces, your state may have a different minimum wage. It may have a different way of overtime expectations. It may have a different rule around independent contractors or record keeping. You have to understand what's the expectation at the state level as well as the federal level. But I'm just going to talk about federal level at this point. I'm sorry, Matt just put in a note. When you mentioned the payroll, are you referring to have just a single bank account for just payroll? Yes, that's what I was saying, Matt. That's correct. Okay, exemption status is the first one. So exemption status is I'm exempt from overtime or I'm not exempt from overtime. So a non-exempt employee is the vast majority of your employees. These people are not exempt from overtime, must always be eligible for overtime, and they have to be paid at least minimum wage. They're normally paid on an hourly basis. I'll talk about hourly versus salary in a minute. Hourly versus salary is not the exemption. That is a way you pay them. It is only a method of payment. It is not exempt versus non-exempt. So they're typically paid on an hourly basis because you've got to track all those hours, right? For the most part, this is a bulk of your employees, and these people are typically in doing manual work, semi-skilled labor, blue collar, and non-supervisory. So blue collar are going to be people who report with their hands, physical skill, that are in the trades. Almost all of the trades are considered blue collar, and blue collar is never exempt. I'm going to say that again. Blue collar, if you have an electrician, you have a plumber, you have a painter, these are never exempt employees unless they are engaged in supervision. They supervise others, meaning that you can have an electrician that you pay $100,000 a year, and frankly, most electricians make a ton of money. You pay them $100,000 a year. It doesn't matter how much you pay them. It doesn't matter if you call them a senior super duper electrician. They're still non-exempt under the law. So be very careful with those blue collar exceptions. The only exception would be is if that electrician supervised other people. And I'll talk about that in just a second. So job titles and the amount of work you pay, the amount of money you pay them has nothing to do with whether they're exempt or non-exempt. It's the job duties, always the job duties. All right. So the exempt employees, these are the folks who you're paying they're not eligible for overtime. You typically pay them on a salary basis. They have to meet a minimum salary test. And I want you to note here that that minimum salary just went up July 1st. It went up to $43,888, which is $21 an hour. So if you have exempt employees who you are paying less than $21 an hour today, you're out of compliance. They have to make a minimum of $43,888 or $21 an hour. By the way, that goes up in January 2025 to $28 an hour. So just keeping that in mind. The exempt employee has to meet that minimum salary test always. They have to meet a primary exempt job duties test of one of the areas of exemption, which I'll talk about in a second. They've got to meet those. And they have to meet this salary basis test, meaning that you cannot deduct from their salary for any reason. There are 7 exemptions that you can deduct from a salaried person's pay, but otherwise you cannot change their amount that you pay them on a every pay period. So you've got to be very careful about that. Now, I always have the question, I have an exempt person who's been exempt, they're a professional, they've been exempt, and they need to go part-time. How do I pay them? You cannot deduct money from that salary that you are paying them. What you can do, if they need to go part-time, for maybe they want to stay at home, you don't want to lose that great person, but they need to stay home for a reason or whatever. You make them non-exempt and you pay them on an hourly basis. Easiest, cleanest way of doing that. You can pay anybody on a non-exempt basis on an hourly basis. You can pay anybody that way. You can be the vice president of the North American division and you can pay them on an hourly basis. Department of Labor doesn't care. Department of Labor cares when you're trying to make somebody who doesn't meet these classifications and you want to pay them on a salary basis. So that's the easiest way to do that, make them non-exempt. So the primary duties, and I'm going to just hit on this very quickly because it is the number one question and area that employers get confused about and sometimes can trip up with the Department of Labor. And frankly, the Department of Labor loves to audit this stuff. Just love it. So the primary duties test, the exempt employee has got to get over this hurdle. The primary duty is the main or most important duty and an important part of the exemption. You've got to identify what's the primary duty of that job. There's no particular percentage of exempt duties required under the FLSA to make them exempt. However, I spoke with the employment attorney a couple of years back, and what she told me is, she said, if that primary duty is getting close to like 50% of the job, you're probably skirting the law, and you probably be safer if you make them an hourly employee or a non-exempt employee. So here's an example. So you've got a crew of workers. They go out on jobs, or they are in-house, and this person's responsible for this crew. And because they have responsibility for supervision of the crew, they're exempt, right? But they also work alongside. So I think of crews out in the field working, and the supervisor or the senior person is there and right along working with them. But they also are responsible for managing the crew. They're responsible for breaks and lunches. They're responsible for discipline. They're responsible for assigning duties, etc. So that's an exempt job. But they're out and they're actually doing the work too, right? They're down there getting their hands dirty too. So what she said is, if it gets close to 50%, you're probably skirting it a little bit. So think about your crew chiefs and those kind of folks out there. They should probably be at least 70 or so percent managing, 30% doing the work, 40% doing the work. Closer you get to that 50%, you want to be careful about that. So it's easier to just make them non-exempt. And I'll give you an example. My husband is blue collar. He runs a crew, but he also gets in there and does the work. He has responsibility to interview new employees. He does make the decision. His boss actually, he goes to his boss and says, I want to hire Bob. And they say, okay, good. So that's about all they ever do. But so he has some of those supervisory responsibilities. He assigns the work, he assigns the projects, but he also is in there working alongside them. He's non-exempt. He's a supervisor. His title is supervisor, but he's non-exempt, and that's because he is not necessarily, the time frame there is a little iffy. He's probably 40-50% he's doing the work, so that he's non-exempt, and frankly he likes it because it gets the overtime. So the lower the total percentage, the greater legal risk of challenge. So remember, the primary duties, those job requirements, not the method of pay, determines whether a job is exempt or non-exempt. It has nothing to do with how you pay them. You can pay a non-exempt person on a salary basis. Don't do it because your payroll person will hate you and it's a big pain. There's 5 exemption classes, and I'll go through each one of those. So the first one is the executive exemption. And the executive exemption is your leaders, your managers, people who have a primary duty of managing an organization, department, or a subdivision. They have to direct the work of at least 2 full-time employees or their equivalents. So that could be 4 part-time people. So 2 full-time employees. Has the authority of the employer to hire and fire. You give them responsibility for choosing people to join their team or for letting them go. You as a leader, as a owner, may have a big voice in that, but they have the authority to do it if you're not there. And they can affect promotion decisions. They come to you and say, Susie is not doing her job. She's not ready for promotion. So you would give weight to that. The administrative exemption is one of the most misunderstood ones. This person performs office or non-manual work directly related to the management or general business operations. They manage processes, intelligence, functions, customers, projects, finances, but not people. So this would not be a supervisor. Supervisor is going to follow under executive. They include then the exercise of discretion, independent judgment related to matters of significance. And that's where the Department of Labor sometimes will confuse us. This is not somebody who makes minor decisions. This is not somebody, and I have the question, my executive admin, she just runs our CEO's life. If it wasn't for her, it's matters of significance. And I say, no. Which plane to put him on to get him to that meeting is not a matter of significance to the company. It is to him, but it's not to the company. So administrative exemption is very rarely do you have an admin, executive admin, or administrative assistant that falls under this category. These are your finance people. These are your research people, legal, insurance people, quality control, purchasing, marketing, public relations, government relations, and some of your computer networking, database administration people occasionally will fall there. So be very careful on the assistants, the admin assistants. Professional exemptions, these are and learned are learned and creative are two easy areas to understand. Learned professionals, this position requires a college degree. That's the easy way to think of it, right? So it's doctors, lawyers, engineers, scientists, pharmacists, accountants, architects, teachers. Those are learned professionals. Those will always be exempt. Creative professionals are folks who get skills through invention, imagination, originality, or talent. These are artists, musicians, writers, actors, graphic artists, journalists, etc. So those are the creative professionals, and those are pretty easy to understand. Those people can always be exempt. And then computer professionals, this is the only category with an hourly basis test. They have to be paid at least $57,470 per year. They have to meet that minimum salary, and their primary duties have to fall in one of these four areas. If you notice, these four areas are fairly high level, complex job responsibilities for a technical person. This is not your help desk person. That person is not doing design, development, documentation, analysis, and testing of computer systems. These are high level folks. So your help desk person should be hourly, easiest thing to do. But if you have technical computer professionals, this is probably where they would fall, and it has to be their primary duty again. So those are the ones that we typically see. There's also areas called outside sales, and outside sales are somewhat unique. They have to have the primary duty of making sales or obtaining orders for services and be customarily and regularly engaged away from the employer's place of business. This means these are not your inside salespeople, people who are taking orders over the phone, people who are answering customer questions. That's not outside sales. Even if they're doing it from their home, these people are out in the community making sales, getting contracts signed, etc. They're not subject to minimum salary requirements and basically their commission many times, and you can pay them zero if you want on the commission. There was a question on commissions. Commissions are a fantastic way to incentivize hitting targets, managing your own performance, hitting the metrics. It's easy to measure. It's easy to understand and remember how to pay them because you have a calculated amount that you would pay them based on their sales, their signed sales orders. You can pay them in a lot of different ways. You can pay them just a straight commission. That's all that you're paying them. Now, keep in mind that if you're paying them commission only and they don't meet minimum wage with their commission, you have to pay them at least minimum wage. So the federal minimum wage is $7.25 an hour. You have to pay them and at least make it up to minimum wage if they're not making their sales. You can do base pay plus commission, so you can have a base and then anything, sales are on top of that. You can make it variable based on the product, based on the quantity that's ordered, sales targets, any other metrics you have, that's fine. And you can do a draw against commission where you have a base amount that they can draw in out of if they have not hit their commission levels. So they have, they're basically borrowing against their future commissions is what they're doing. You have to make sure that folks in a sales job are very motivated. If you have folks that are not motivated, they will not do well in that job. You'll be frustrated and they'll be frustrated. I used to recruit for a company and most of what I recruited for was salespeople. Here's my secret. Find people who are heavily involved in athletics somewhere. They were competitive. They were okay when they lost because they got up and did it again. They were always looking to make themselves better. That's just a side note, but very goal focused kind of people, very competitive people make really good salespeople. That can be good and it can be bad, right? They can be exceptional salespeople. But they can also steamroll other people, other salespeople. So be careful about the records you keep and what you're rewarding. What kind of behavior are you wanting to reward? That's a whole nother conversation. Yeah, so just watch for that negative competition that may occur with salespeople. There is a caveat for inside salespeople under the FLSA. They can be employed by a retail or a service establishment. I think of this as folks that are selling stuff for us in the mall or in a store, a retail store. And so they have a regular rate of pay. They probably have a base rate of pay, and then they have a commission that they get on top of that. But you have to remember that their regular rate of pay has to exceed 1.5 times the applicable minimum wage for every hour worked in the work week, in which overtime hours are worked. So be careful about when you're in this area. More than half the employee's total earnings in a pay period must consist of commissions. So if that's not what's happening, if that's not the organization that you want, where you want them focused on commissions and not focused on sales, maybe you're more concerned about customer support or customer satisfaction, you may not want to do commission in the retail world. It's entirely up to you. So here's a question. So I have a couple of these through here. So should my executive assistant be salary exempt under the administrative exemption? Yeah, probably not. Probably not. There are some exceptions. Really big companies have executive assistants who are managing other assistants. They may be making some significant decisions in the organization. Typically, I would say 99% of the time, they are not. And I personally have gone through this with a Department of Labor issue, and we went back and the employee didn't file on us. I came into the organization, we were 100 people, and the executive assistant was being paid on an exempt basis. I said, I don't think that's cool. We sat down, I talked to him, to the CEO, and he's like, well, okay, yeah, that's fine. She can make overtime. I'm fine with that. And because she had not complained or we didn't have anything filed against us, what I went to her and I said, here's what we've identified. We've identified you probably should be non-exempt. You probably should have been paid overtime for the last year, I think a year and a half that she'd been there. I said, I need you to give me an estimate of the amount of overtime you believe, and the amount of hours that you believe you worked overtime in the last 18 months. And we're going to trust you on that. And she came back to me a few days later and she had an amount. And I think we paid her out like $1,000 or something like that, which I thought was really inexpensive for the situation. And we made her non-exempt. She became an hourly employee after that. That's the safest way of doing it, is addressing it and paying out what you believe she may have been owed over the last period of time. So be very careful about that, because I also had somebody who was an accounts payable person, was being paid on a salary basis, and came to me one day. She and the CFO did not get along. He always complained about her. She came in, she dropped her keys on my desk one day and she said, I resigned today. It's Friday morning. And she said, and I am a non-exempt employee being paid on as an exempt employee. I've calculated that my overtime over the last year and a half, or year, or whatever it was, is approximately $2,500, and I need a check by the end of the day today. And I'm like, whoa. So I sat down and talked with her. And I was new to the organization. I'd only been there a couple of months, and absolutely, yes, accounts payable is going to be non-exempt, absolutely, every time. And she had been put on a salary basis. I went to talk to the CFO. He blew up and he said, I'm not going to give her a dime, And she had talked to her father-in-law, who was an attorney, and she said, I'm happy to give you the contact information for the Department of Labor, and you're welcome to have them come in and audit. And I'm like, I'm good with that. So myself and the CFO walked across the hall to the CEO, and I said, here's the situation. He does not believe we want to pay out. I want to talk, I want to talk this through. The CEO just looked at me and said, pay her money and get her out of here. So the last thing he wanted was any kind of a challenge with that. So we did, and we talked with our attorney. They drew up a settlement agreement that she would not file anything against us and such. So be very, very careful. In today's world, and this was a few years ago, so this is not as there's not as much information available online. In today's world, an employee can Google that any day of the week and get the same answer, that you're owed overtime. So be very careful. So improper deductions from exempt employees. If you have a group of exempt employees, you cannot deduct from their pay for any reason other than 7 areas, which I'm going to show you in just a minute. That's it. There's no other way you can deduct. So you cannot deduct for illness in less than full day increments, except if it's an FMLA thing. If they have an FMLA exception where they are off for 2 hours twice a week, you can take that as you can do that as unpaid leave. You can deduct for that. FMLA is an exception. Here's the other exceptions. Absence for one or more full days for personal reasons. Absence for one or more full days due to sickness or disability. Deductions are made under a bona fide plan, policy, practice, etc. So if you have a sick leave program and they take 2 days of time off, you can replace that with sick leave. Offset for any amounts received for jury duty fees, witness fees, or military pay. So yes, if they are doing jury duty, you can deduct that $14 a day from their pay. Again, your payroll person will hate you because it's more of a pain than $14 is worth. Penalties imposed in good faith for violating safety rules of major significance. So yes, you can say suspend them for a week without pay because of a significant violation of a safety rule. Any unpaid disciplinary suspensions for one or more full days for violations of written workplace conduct rules. Again, you can suspend them without pay. Actual time worked in the first and last weeks of employment, and then unpaid leave under FMLA. So those are the areas you can deduct from an exempt employee. Otherwise, they should be receiving the same amount every pay period. Overtime pay. This is pretty simple to understand, but you need to understand sort of some guardrails here. You have to set a work week as any fixed recurring period of 168 consecutive hours, 7 days a week. If you have workers in an office and you have workers in a warehouse and you have workers in retail locations, those work weeks can be different. If it's easier for you to have the warehouse people working a different work week than the office folks, you can do that. You just got to, again, your payroll person will hate you because it's going to be more work. But you just got to monitor those work weeks and make sure that where the overtime is occurring. You have to set a rate of pay, 1.5 times regular pay after 40 hours a week. Requires overtime on time work, not time compensated. I don't know if anybody knows what that is. If you do, type it into the chat. But what that means is that, for instance, the 4th of July fell on Thursday, right? So let's say you paid holiday pay on Thursday. Nobody worked. You paid overtime or paid holiday pay to everybody. And your employees only typically work 32 hours the rest of the week, right? That's 40 hours. Well, if they worked 35 hours, do you have to pay them 3 hours of overtime? You don't. You don't. Because it's on time worked, not time compensated. You compensated them for the 4th of July, but they didn't work 40 hours. So you don't have to pay them overtime. You can, if you want to be generous, you certainly can pay it and count the holiday if you like, but you're not required to do that. Hours worked includes all hours the employee suffered the employee to work. And by suffered the employee to work, that means you allowed them to work. Not that you approved them to work, not that you told them they could work, but what you allowed them to work. So if you told the employee to go home at 5 o'clock, clock out, get out of here, I don't want any overtime, come on guys, and they worked anyway, or they didn't do as they were told, and they came in early one day and worked for an hour before everybody else got there, you allowed them to work. You suffered them to work. Under the law, you have to pay them for that. Even if you told them, go home at 5 o'clock, you have to pay them. Now, when they do that, that can become a performance issue. So instead of saying, you know what, Harry, if you do that again, I am not going to pay you for that time. You're on your own. You can't do that. You have to pay them for it. You grit your teeth and pay them for it. But then you can start putting them on a performance plan and start calling it out as a performance problem. I've told you not to work the overtime. I've told you not to come in early when nobody's here, etc. So that becomes a performance conversation. You still have to pay it. Regular rate of pay includes all performance-related compensation, such as bonuses and commissions. So what that means is that their regular rate of pay, if they are a non-exempt employee, you have to adjust their regular rate of pay if they have bonuses and commissions. And I'll show you that in just a second. That's kind of a twist to look at. So here's another question. Which of the following do we have to is compensable time? That is, you have to pay for. Okay, commute to and from work in the workplace daily. Do you have to pay for that? No, you don't have to pay for their commute, even if it's 100 miles. You don't have to pay for their commute. They made that choice. The commute from home to a job site that's not the office, do you have to pay for that? No, typically you don't. That's their the workplace. They have to get there. Commute to the workplace, then to a meeting site during the workday. So they come into the office, they have to go downtown to a meeting. You have to pay for that. Yes, that is work time. They're commuting on your behalf to go to this meeting or another site if they are commuting between sites. They commute home after work hours with a stop at the post office on the way. This happened for me. Yes, you have to pay that. That person is still on the clock because they are working for you. They are taking something to the post office or dropping something off at a job site or to a customer. That is work time. As soon as they drop that in the mailbox, they're off the clock. So they're working for you in that case. All right, here's a couple of others. Can I pay a non-exempt employee a weekly salary? Yeah, but paying a salary does not mean the employee is no longer entitled to overtime. And yeah, but your payroll person is going to hate you because this becomes more complicated payroll because they still have to calculate the overtime, even if they're being paid on a salary basis. Can I pay an employee on a biweekly or 2 times a month basis like my exempt employees? Yes, but overtime must still be calculated on the 7 consecutive 24-hour pay periods, not 24-hour periods or your work weeks, not per pay period. I'll show you how that kind of works out. Can I pay an employee different wages if the employee works at a different job sites during the pay period? You have a couple of retail sites and they pay different wages. Yes, but you must still total all hours worked at all locations to determine if overtime is due. Okay. Compensatory time, and I'll just hit this very, very briefly. Comp time. Can you say to an employee, you know what? I know you work, 48 hours this week. Why don't you go? I just pay you the 40 hours, and then you can take those other 8 hours. You can take next Friday off or Friday next month off. No, compensatory time in the private sector is not legal. It's just not legal. Only the public sector, so government, can do comp time. It's not allowed in the private sector for non-exempt employees. Now, your exempt employees, they're exempt. So if, they really put in a hard week and you say, hey, take Friday off. If you exempt employees, no problem. You're still going to pay them. But they can you're not giving them comp time. They're an exempt employee. They get the work done in whatever period of time they have to do it, but they have to get the work done. Hourly employees, non-exempt employees, you cannot do comp time. Be careful. I've heard this. I don't know how many times as I've taught classes. Oh yeah, I just give them comp time, and they can take it off the next week, or they can take half Friday off. No, you can't. You can't do that. So you have to be very, very careful with comp time with non-exempt employees. Minimum wage. This is pretty simple stuff, right? Federal minimum wage is $7.25. Look at your state or your county or your municipality. I think just the city of San Francisco has its own minimum wage. So you have to pay whatever is appropriate in your location. So know what that is. If the state or the local minimum wage is higher than the federal wage, you have to abide by the higher, whatever is the most beneficial to the employee. So whatever benefits your employees. So there's no getting around minimum wage at all. There are tipped employees. For tipped employees, and these are people who claim a tip credit in your records. They have to customarily and regularly receive more than $30 a month in tips. Okay, the employer must consider tips as part of wages, but the employer must pay at least $2.13 an hour. And if they don't equal the minimum wage, if their tips and their 213 doesn't equal minimum wage, you've got to at least pay them minimum wage. And they probably shouldn't be tipped because they're not getting enough tips. They're not doing a good job. Now, if a tipped employee goes on vacation, what do you pay them? You can do two things. You either have to pay them minimum wage for their vacation time, Or you can pay them an average, and you can go 6 months or the last 12 months or whatever, an average of their pay for the last 6 or 12 months, whatever time frame you choose. So you can do it either way. You've just got to be consistent with your tipped employees. So just be careful with that. Let's see. All right. You have an accounting clerk, Mark. He prefers to eat lunch at his desk. Really doesn't like the break room. Maybe you don't have a break room. But he reads the news online. He plays on his phone, while he's eating. Mark occasionally gets a phone call or somebody stops at his desk and asks a question. He answers and then he goes back to lunch. Is Mark on or off the clock? One challenge with having people eating at their desk is they are on the clock as soon as somebody interrupts them. Now that could be for 15 minutes, could be for 2 minutes, it could be for a half hour. But as soon as they are asked a business question, they're back on the clock again. So I would heavily encourage you, if you have folks that like to eat at their desk and they're non-exempt, you should have them move to a break room. Or I've also seen where they put up little signs like on their monitor. So it faces out to everybody and says, I'm on lunch. Please come back later, or whatever message you want to give. So you can do that if you don't have the space for a break room or something like that. Just be sure that if Mark does get interrupted, that he clocks that time. And maybe it's a 10-minute question, maybe it takes him 20 minutes to look something up for the boss and copy it off and send it to him. Make sure that he clocks that time and that he adjusts his time so that he is paid for that time that he was working. Okay. Now, do we have to pay for breaks and lunches? Breaks, yes, you have to pay for breaks if they're 20 minutes or less. So breaks are a work benefit. It doesn't now. I will say that FLSA and many state laws do not require a lunch break or breaks at all. It doesn't require lunch. You can work people 40 hours, or 24 hours straight. You don't have to give them a lunch. They won't work for you for more than a day, I'll guarantee you. So you do give breaks, 20 minutes or less, they're paid. They're a benefit. Lunches, anything 30 minutes or more, are not paid. And so they have to clock out, clock back in, but they can't perform any work-related tasks. So again, check with your state or local regulations whether or not you have to provide breaks and lunches. Again, federal law does not require it, but there's a lot of states that do require it. And if it's a minor, they absolutely, under federal law, are required. Okay. All right, let's look at bonuses. Bonuses are wonderful things. They're incredibly good motivators. They're really wonderful for thanking people for the hard work that they've done. But there's a way you have to pay them for a non-exempt employee. So a discretionary bonus is not calculated in their overtime. So discretionary bonuses is given at the employer. You as an employer say, you know what, we've had a fantastic month. Everybody gets $100, right? That's discretionary. You decided to do that. It wasn't planned. It wasn't expected. It wasn't earned by the employee. So it could be a holiday bonus, a spot award, those types of things. They're not calculated in overtime. Good for you. There's nothing you have to worry about there. But a non-discretionary bonus is calculated into overtime. And a non-discretionary bonus is one, again, there's no discretion here. It was earned on a preset agreement, a formula, conditions. So there's no, when you say discretion is I chose to do it. This is non-discretionary. I promised I would do it and I have to pay it. So things like production bonuses, shift bonuses, attendance bonuses, quality bonuses, retention bonuses, that type of thing. So these are not commissions. These are bonuses that you have probably a written formula for if the production hits this amount for the month, we're going to give everybody $100, whatever it is. And you've written that or you've communicated it in an email or whatever. So that is something that is non-discretionary. And as you do payroll for your non-exempt employees, you have to recalculate overtime with that discretionary bonus. And I'll show you how you do this. And God love you if you can remember this, but this is, again, most of your payroll software company or systems will do this for you, or your payroll person should know how to do this. So here's Sue. Sue earns $10 an hour. She works a 48-hour week, so she has 8 hours of overtime, and she receives a $24 weekly production bonus. Good for Sue. Okay, the first thing we do is we have to calculate her regular rate of pay. So that's $10 an hour times 48 hours is $480. And then we have to add in the bonus. So her regular rate of pay is 480 plus the $24. Her regular rate of pay is $504. So now her adjusted regular rate of pay, taking the 504, dividing it by 48 hours, is now 10.50 an hour. So she's made 50 cents more an hour based on that bonus. Okay. So now you calculate her overtime rate based on this new rate of pay. So that's 10.50 times halftime is 525 times the 8 hours of overtime is $42 of overtime. So our weekly earnings total $546. Again, this is something that I'm talking really fast here, and you'll not retain this, but know that if you have non-discretionary bonuses and you have non-exempt employees earning them and they work overtime, you've got to calculate a new rate of pay and then calculate the overtime on top of that. So the overtime pay is based on a rate that includes the bonus, always. All right. So piece rate, I threw this in here. If you have people who are doing piece rate work, here's another way of doing overtime. This is not with bonus, but this is just for overtime. Bob works 50 hours, produces 100 pieces at a rate of $4 per piece. So his regular rate of pay is $4 per piece times 100 is $400 for that week. His adjusted rate of pay is the $400 divided by his 50 hours, which is $8 an hour. So again, he doesn't have a base pay. He's paid on a piece rate. So his rate of pay is now calculated at $8 an hour. Then we take that $8 an hour times it by halftime, which is $4, and calculate your overtime payment, which is $40. So his weekly earnings are $400 based on this and $40 based on his overtime. Again, if you're doing piece rate, be careful about overtime. Be careful about if you had a bonus, you'd have to redo this too to add the bonus in. So it's a great incentive and it's a way to get people to focus on, getting product out the door or finishing a project. But know that your hourly people will have unique calculations for the base rate of pay. All right, differential pay. Differential pay is entirely up to you. This is where you pay an added amount based on some sort of when, where, or how an employee works. So FLSA does not require differential pay. So you don't have to do it, but you can do it and you incentivize certain things, or you incent people to work a bad shift, to work in the weekend, to work in outdoors or whatever. So some of the examples of differential pay would be shift pay. Maybe you pay extra for the graveyard shift or for evening shift. Emergency shift pay. If they're called in on an emergency, you pay them an additional dollar amount. Premium pay for a particular job. Hazard pay if it's a hazardous type of environment where they need additional training or such. Weekend holiday pay, on-call, callback pay, reporting pay, travel pay, geographical differences. It's entirely up to you. Again, the FLSA doesn't monitor any kind of differential pay. But you may have some of those in some of the state levels or something like that. But for the most part, this is discretionary on your part. What is it that's going to help you fill those shifts? Incent people to work in outdoors, incent people to be on call. That's entirely up to you. And that amount that you want to pay is entirely up to you. So your geographical differences, you typically see that, right? You're going to pay more in Los Angeles than you're going to pay in Kansas City for the same job. That's entirely up to you how you want to evaluate that. All right. Child labor. And I'll just talk about child labor quickly here. I will tell you that I have seen more issues with child labor fines and investigations lately than I have in the past. And maybe I just haven't been watching in the past, because the Department of Labor is really, really good at protecting our workers. And they are very, very focused if they find people who are what we call child labor. That's anybody under the age of 16. So, well, it's actually anybody under the age of 18, although 16-year-olds, they have very few restrictions. But if you employ people under the age of 17, 16, you need to be very, very cognizant of what you're doing. So they have to be, the 16, 17-year-olds, they can't do any kind of hazardous work. And there's a broad range of what hazardous is. Any kind of machinery they work around, anything like that. Be very, very careful. And you can find these all in the Department of Labor under child labor provisions. But these fines, and the things you see a lot are the 14, 15-year-olds that are working like fast food, that kind of thing. There's a local amusement park here in Utah. Both my daughters worked there. My daughter was 15. She was working there. She came and got in the car one evening and she was upset because her supervisor had yelled at her. And I said, "Why did she yell at you?" And she said, "Well, I was cleaning up and she told me that my shift is over and I had to go. And I told her I wasn't done. And then she told me that she was mad at me and I had to leave. And she was just rude, Mom." And I'm like, "Okay, well," I said, you get off at 9 o'clock. The law says you cannot work past 9 o'clock at night. The law says you cannot work past 9 o'clock at night. And I'm guessing that amusement park, which hires a lot of young people, knows those rules really well. And so right at 9 o'clock, sharp, that supervisor came by and said, "You need to go clock out." And she said, "But I'm not done cleaning." And she said, "Go clock out now and go home." And so she took that as an affront, but I took it as, good for you, employer. You knew what you were doing. You made sure that young person was out and clocked out by 9 o'clock. That's the law. So be very careful. I've seen some significant. I'm looking at just 5 fines in the last let's see, couple of years, or last 2 years in Utah of $50,000, $42,000, $180,000, $14,000, $42,000 for organizations that have young people that are working past 9 o'clock at night or working around equipment that they shouldn't be working around. And so you've got to be very careful. The work restrictions are during school hours, they can only work 3 hours a day, 18 hours a week, but they cannot work past, what is it? I can't remember the time now. School vacations, they can work 8 hours a day, 40 hours a week, but they can't work past 9 p.m. So be very, very careful about that and be very careful about the responsibilities you're giving them, and not doing any kind of hazardous work or working around machinery of any kind, and driving large trucks or anything like that. Be very careful about that. So I'll just say that a couple of times. Be careful with child labor. Equal Pay Act this is not FLSA. We'll transition now to a couple of other pieces. Equal Pay Act 1963 says you've got to pay equal pay for equal work. This is between men and women. Equal skills, effort, responsibility, working conditions must be paid the same amount of money, must be on the same wage scale, right? So the only exceptions, there's 4 exceptions, as you can see here. If there's a seniority system in place, you can pay a different wage for the same job. Performance levels, if the person that is not performing is paid less, that's okay. Production levels or production quotas, you can pay less. And any other factor other than gender, right? So if you have a bona fide seniority system, and typically you see those in unions, that is fine to pay them different. But otherwise, you've got to be able to quantify and explain why a woman is making less than a man if you're ever audited. And people will sue under Equal Pay Act if they feel like they're being treated differently from a wage standpoint. All right, here's another quiz for you. I want to classify my seasonal door-to-door salespeople as independent contractors. What do I need to consider? A, the nature and degree of control retained by the employer, how much per hour the individuals are being paid, a signed agreement between the parties, or how many years of experience the individuals have. The answer is the nature and degree of control retained by the employer. Independent contractors are regulated by the IRS, Department of Labor, EEOC, and OSHA. So be careful with independent contractors. I will say that for the most part, an independent contractor is probably, if you're thinking, can I use this for my workers that are seasonal? Can I use this for my workers that are, outside door-to-door sales? No. The answer is no. Be careful about that. Let me tell you what the nature and degree of control by the employer means. So There's three areas that the law would look at if you say I'm an this person's an independent contractor. Behavioral control, and I'm going to use the analogy of a plumber. You hire a plumber, he's an independent contractor, to come in and redo your bathroom. Okay. So behavioral control. Do you give instructions to that plumber as to how to plumb? No. They come with training. They know what they know what they're doing. They may bring in helpers to help with that. That's independent. That's independent control. They determine when they're going to come and if they're available. Right? Ever had a plumber that's scheduled and they don't show up for 3 days and then they come back for 2 days and they come back, they're gone for a day, and then that's independent control. Okay, and what sequence of the work are they going to do? How are they going to do the work? That's up to them because they're the expert, they're the contractor. So that's behavioral control on the part of that independent contractor. Financial control. You pay them a salary? No, you pay them for the job, not for the hours typically. Can they create profit and loss for themselves as a plumber? Yes, they can determine the rate they're going to charge. Can't do that if you're an employee. Um, how much they've invested in tools and training is under their control, right? How they're paid. They paid by invoice, by bill. They're not paid by salary or by a weekly amount. They're not paid by the hour, is what I'm saying. And they're never paid through payroll, and they can incur their own expenses, right? That's financial control. Relationship of the parties. There's a written contract for an independent contractor. You are signing an estimate maybe that he's done or she's done. You're signing some sort of job outline. Do they get benefits from the employer? No, they're not employed by you. They're not an employee. How permanent is the relationship? It's typically short term, right? They're here to do the job, they're paid for that job, and then they leave. Are their services a key aspect of the job? No, no. If you had that plumber that came in and did something in your store or in your warehouse, they're not there as an employee. They're there to do a job and to leave again. They're self-employed. They carry their own liability insurance. They can work for other parties at the same time. I had a plumber, tile setter in my bathroom that he'd work a day and then he'd leave for like 3 hours and then he'd come back and then he'd leave for 2 days and he'd come back. So his relationship with me is just that. It's a contractor. There's the length of the work assignment is up to you and them. It is not something that's ongoing. So be very careful, and especially if you're looking at young people, the Department of Labor looks at those types of relationships very, very closely. And so independent contractors rarely can be used on any kind of a length of time. They have to have all of these satisfied to become an individual or independent contractor. If they don't, and you use people as an independent contractor for any period of time, you are going to be up a creek. And I guarantee you that I had a story, a woman's daughter, 17 years old, was contracted to do some cleaning in the evenings for her dentist's office, right? So she had a very specific schedule. She came in at 5 o'clock. She worked 5 days a week. Every night she was there. She was given instructions on how to clean, what to clean. The products were provided to her. She had no personal tools that she brought in. She used everything that was there on site. She tracked her hours, and she was paid by the hour, not by the job or the project. And was there a key aspect to the work that she's doing that the employer was dependent upon? Yes, the employer, so it was a medical office or a dental office, could not open if that cleaning had not been done the next morning. They couldn't open. The cleaning had to be done every night. That was a key aspect. That is not an independent contractor. That's an employee. So be careful. There was a couple of questions about independent contractors. Unless you can satisfy all three of those areas, they're not independent contractors. Now, if you think that you're not sure if you're going to need these people long term, you're not sure it's seasonal, you wanna see if they're going to work out, hire them as a temporary employee first. Don't hire them as a full-time employee or even a part-time. Hire them as a seasonal or a part-time temporary employee. You can have a temporary status in your workplace and say, After 90 days, if everything works out, we'll convert you over to a regular employee. It can't go on for years. You can't be a temporary employee forever. Usually 90 days or so is about the extent that the Department of Labor say now they're your employee. But hire them as a temporary status first to make sure that they're going to work out, make sure you can train them, make sure that you're going to have work to do to keep them busy, and then convert them over. Don't bring them in as an independent contractor. You'll get burned at some point. Okay, do I have to pay for this? Bob arrives at work 20 minutes early every day, promptly clocks in, then goes to get coffee, chats with his friends before actually beginning work, going out on the floor. Then he stays on the floor after his shift ends and maybe, clocks in out about 20 minutes late. You've told Bob to not clock in early or clock out late twice now, but do you still have to pay that overtime even though you've told him, don't do that, Bob? Yes. Yes, you have to pay him. He was allowed, or you suffered him to work. So the law. He was there, he was on your property, he hadn't clocked out yet. But the solution to that is that becomes a performance issue. And you address it through a performance issue. You cannot not pay him while he was there on site. The Portal to Portal Act, I'll hit really quickly. This is another piece of legislation that amended the FLSA to define some additional hours of work, on-call or standby time. It is paid if you are they are waiting for they're in a standby status. You're waiting for a piece of machinery to come up and get cleaned or whatever. They're not paid if they're on call. If they're you're on call in case the system goes down this weekend, you don't have to pay them for that time. You can. I mean, we had some folks that were on call over the weekend. They had a cell phone that everybody, the person took home that weekend. And if they answered a call, then they got $100. That's the easiest way to do it. But you don't have to pay for on-call time. Preparatory or concluding activities, that was Bob in the previous slide. So you don't have to pay him you do have to pay him if the preparatory or concluding activities are part of the job. That is prepping the machine before it starts manufacturing something. That's paid time. And concluding activities, if he has to clean the machine at the end of the day, that's paid time. So preparatory and concluding activities could be putting on uniforms before they go on to the job site, or that type of thing. Waiting time, no. If they arrive early, like Bob, and just goes into the break room, no, you don't have to pay that. And frankly, that's a performance issue if he keeps clocking in. That you can ding him for. But yes, waiting time, if they log in, they're standing there and the machine goes down and they have to wait an hour for the tech to come over, that's paid time. Travel time, yes, you have to pay that for non-exempt employees, and it's fairly complicated. If you have questions if you have non-exempt employees who are traveling for you, why don't you give me a call, because it's a little more complicated. But you do have to pay certain hours of travel time over the weekend, and if they're working and if they're not working, and commuting, no, you don't have to pay them for commute time, but you do have to pay them for one site to another site, that kind of thing. Training time, it's not compensable if it's voluntary, if it's outside normal working hours, not related to the employee's job. I worked in a hotel at one time. We had a lot of Spanish speaking employees that we offered an ESL class to at 3 o'clock in the afternoon. And this was a lot of more housekeepers, so they were done by 3 o'clock. It was free to them. We did it in one of our conference rooms for them on a weekly basis, and we didn't have to pay them. They clocked out of their housekeeping duties, but we paid them for that hour that they stayed after for the class every week, just because it was the right thing to do. I wouldn't have had to do that because it was voluntary, but for us, we felt it would help us as an organization to better communicate with our guests and such. So we paid them for the time that they came to that training. And then meals and breaks, again, you don't have to pay under federal law for breaks. For meals. Now, I will say that there are some state laws that might be a little bit more tight about meals and breaks. So again, I encourage you to look at your state and local laws and make sure that you're in compliance with all of those before you determine, I'm not gonna pay for that. And then record keeping, I will just say FLSA does require a lot of record keeping. And a lot of this can be in your payroll system or in your HR system if you've got one, or just paper in the employee file. So personal information, who they are, they're eligible to work, that type of thing, the dates they were employed, the hours and days the work week begins and ends, total hours worked, each work day and each work week, total daily, weekly, straight time earnings. And this should be in your timekeeping system, but it could be paper. You could have paper systems, and that's okay. Just keep copies of them. The regularly hour pay rate for any week when overtime is worked, total overtime pay for the work week, deductions from or additions to wages that you provide, total wages paid each pay period, and the date of the payment and the pay period that it covered. Again, this should be all in your payroll data. Now, some people asked about, um, uh, how do I keep that information and that type of thing. Somebody asked about commute time. How do I monitor commute time? How do I keep track of mileage? There's a lot of ways to do that. I would say there's a lot of really great online systems now. Apps that the employee can have on their phone and they can clock in and out right on their app. You can put uh, things in a car. If you've got a company car or truck that they're driving around, put that in there. You'll know exactly how much mileage they're running on that car, or truck. That's the easiest way to do it. I will say that if you do an app to catch their hourly clock in, clock out, that kind of thing, um, I would require that they have to be in the building and perhaps touch their phone to a time clock, uh, or somehow to clock in and out, because we had people that were clocking in at Starbucks 2 miles down the road. And then when they got to work, it was, 20 minutes later, and they were being paid for that time because they were just doing it right on their phone app. It's entirely up to you how you want to do that. Of course, you can always do, there's some really nice timekeeping systems that are all computerized now and will download directly into your payroll system. If you want to just do a time clock on the wall, that's probably the easiest way to do it. But if you've got a small group and you trust them, do it on the phone app. There's a bunch of payroll or time tracking systems that are software that are out there. It did have a question about hourly pay appropriate for entry level. I'd say check your local Department of Workforce Services or labor area. You can also Google it. I mean, I Googled Utah. I'm in Utah, and the average entry level wage today is $17 to $18 an hour. That's a lot of money compared to what I made when I was entry level. It's entirely up to you what you want to pay. I would look at what's typical in your area. I would look at what your competitors are paying. And you can simply just have your 16-year-old daughter call your competitor and say, hey, I'm interested in a job. What are you paying? And the employer will tell them, right? You can figure out what your competitors are paying. You've got to be competitive. People asked about benefits. Benefits are separate from wage and hour. It's entirely up to you what you want to offer, whether it be medical benefits, time off, retirement plan, or 401k. They don't have retirement plans anymore. 401k. And you can do a lot of those things fairly inexpensively. You can shift a lot of expense to the employee. That's hard if you have non-exempt employees, because if they have to pay $800 a month for family coverage, they can't afford to work. So your benefit has got to be equal to what your employees can afford and what makes sense. That's why I say give them some money and ask them to go out on the exchange and show you the receipt that they're enrolled in benefits. There's easy and tough ways to do that. Call a benefits broker. Easiest thing to do in the world. They all work off commission, so there's no expense to you, and the commission comes from the plan that they enroll you in. So if you want to talk to a benefits broker about how do I do medical and dental, how do I do life insurance? Life insurance is very inexpensive, by the way, simple to do. But if you want to do any of those types of plans, talk to a benefits broker. They'll help you get the best price in the market. The other thing to think about, and I believe it is nationwide, but definitely in Utah, you can do cooperative benefits purchasing, meaning that you can join with organizations that are similar in nature to yours. They have the same product, the same industry, and you can buy benefits as a group. So I did this years ago with, I was in the life sciences. So a lot of startups in life sciences, right? A lot of folks in a laboratory trying to make magic. But they're small. And so there was, I think, 6 of us, 6 small biotech companies in this group. And we had a broker here in town. If you're in Utah, let me know. I can give you the name. That went out and we bought benefits as a group. And as a group, we had almost 2,000 employees. And so they could negotiate lower rates for us because they were negotiating as a group. So keep that in mind. It's, as like I say, it's okay to do that in the state of Utah. I don't know if that's a Utah thing or not. But if it is, your benefits broker will know. If you call a benefits broker, they'll know, if you're eligible to do that in your state or in your area. So think about that. And then I think time-wise, we're getting tight. I will mention we did have a question about finding employees and recruiting new employees and that type of thing. I don't have that in this presentation. However, here's the good news, is I do have a webinar on August 6th called Recruiting in Tough Markets. So in a couple weeks, I'll be doing that topic as well. If you want to join into that one, it'll be, it's on the SCORE calendar, so you can register for that. So I'm going to take a breath here and let you, if there's any questions for the next couple of minutes, I'm happy to try and answer any of them. I will also add that my contact information is here. I am a SCORE mentor. I focus on the HR world, and you're welcome to get in touch with me. I also own a consulting company and training company. There's my phone number. Reach out to me either way.
Thanks, Janine. We do have one question in the chat from Matt Wellman. When you mention the payroll, are you referring to have just a single bank account for just payroll?
Yes, yes. Yeah, have a separate account so that if you're ever audited, you'll want to make sure that those monies that are going into the account that you're paying, those are your wages going in there, and the deductions coming out are all very clean and clear. And a lot of times you'll just be transferring that account over to your bank account as you pay out. So again, it depends on your payroll system, but keep it separate from your other operating expenses.
Any other questions? You can just put them in the chat or the Q&A. We've got another 2 or 3 minutes to answer questions because we have to drop off at 11:20 Utah time. Give it another minute for those slow typers.
All right.
Alrighty, well, it doesn't look like anybody has any questions. Gail Matthews is here. She's the chapter chair for the chapter. Gail, would you like to say a word before we drop off here?
Yes, I would. Thank you so much. I want to thank everybody for joining us for this webinar on wage and hour information. And also ask you busy professionals if you'd be interested in becoming a volunteer for SCORE Utah. You can go to our website at www.score.org/Utah and fill out the volunteer application. Again, thank you for your attendance.
Great. And don't forget, we specialize in free mentoring. So if you're in need of a mentor to answer some questions about your business, help guide you, please feel free to reach out, score.org/Utah. Thanks for being here, everybody. And thank you, Janine, for, wow, this fire hose of information. Really appreciate you being here and sharing your expertise with everyone.
Could be a whole day or 2 or 12. Yeah. Thanks, everyone.
Thanks, everyone. Bye.